Hello, my name is Mr. Uchenna Clems, a tax consultant. I'm here to share some light on this issue of value-added tax. Of course, most of my clients has met me on several occasions and say how would they be able to file their VAT and what is actually this value-added tax of a thing that they've been penalized on yearly basis on, because the actual practice is that once they get their tax clearance till the next accounting year before they will come to Federal Inland Revenue again. But we keep enlightening people that ordinarily it's not supposed to be so, because there is what we call VAT remittance, which you are supposed to file on monthly basis. But now, first I want to start by saying, what is this value-added tax? Now, value-added tax is a consumption tax placed on a product whenever value is added at each stage of the supply chain, from the production point to the point of sale, which means whenever value is added to a product or a service, we are expected to deduct VAT from it. Of course, the rate has changed right from February 1st of February 2020 in Nigeria. The rate of value-added tax has changed from 5% to 7.5%. Of course, that is not news. Again, most business experts, entrepreneurs, and business consultants, they know that. So it is 7.5% now. Another thing we should know in VAT is that VAT is an indirect tax, which means it is charged on consumption or good. It is charged on the consumption of a particular good or services. So whenever you consume a VATable goods or a VATable service, you indirectly pay your value-added tax. Now I'm going to be talking directly to business experts, entrepreneurs, those that are into government contracts. First of all, what is the procedure of filing a value-added tax? First, the system has changed now. Of course, if you're not aware, there is a new platform introduced by Federal Inland Revenue called the Tax Promax. So first, you need to register your company with a tax Promax. Of course, you need to fill the form. There's a particular form you need to fill and send it to Inland Revenue, detailing the name of your company, the ROC, the email, and a lot of things, the tax representative, the authorized signatures, and code them. Then you send it to the Inland Revenue, where they will have to raise a tax promise or put you into tax promise. Now, when do you file VAT? VAT is filed between 1st to 21st day of the month preceding the month being filed. Now I'm going to explain that. Meaning, if you, for example, you are filing for February, if you're filing for February VAT, you are given the room to file it between 1st of March to 21st of March. So if you don't file it within that period, it means you already attract penalty, and penalty has been raised from 5,000 naira to 50,000 naira. So it's a big deal now that you have to be filing your VAT on monthly basis. Okay, now first is that when after filling the VAT form, you raise the remitter number and pay the due amount if there is any inflow. The point is that at the month where you have no inflow, you are not expected to pay anything, but you must file. The law did not say you shouldn't file, because that's the mistake of many contractors. They feel that, oh, any month I did not file there's no inflow, there's no revenue, then I shouldn't file VAT, because or some will tell you that VAT, oh, we did job with federal government and VAT has been taken away from source. But it doesn't work that way. Whether you made no income or whether there is inflow or no inflow, you are expected to file this monthly remittance. Meaning that if it is nil, that you did nothing at a particular month, you are also expected to file nil to Federal Inland Revenue. Now, how do you do that? Through your Tax Pro Max now, because they are not receiving any filled form again, unlike before, where you can fill it in and maybe attach your bank statement and send it to them. No, what you need to do now is fill these things online and submit it. So they've made it easier that you can just go online and fill your VAT returns. No, so after filling the VAT form, you raise the remitter and pay the due amount if there is a VATable inflow. Mark my word, I said VATable inflow, because there are some that are not VATable. Like clinical equipment are not VATable. So if you are trading under that, you are not supposed to pay any VAT on them, but you should be able to render your revenue and explain that it is not a VATable item. So non-VATable item, if it is non-VATable, no amount is payable. All right. And non-VATable goods, let me just give you some non-VATable goods that you don't need to worry about paying VAT for them. Number one is all medical and pharmaceutical products are not expected to pay VAT, but they are expected to file VAT return. Read my lips very well, because this is a mistake of so many that are into such business. They say they are exempted. Exempted is not exempted from filing. The second item on my list is basic food items are exempted from VAT. Book and educational materials, including educational performance, tuition fees from nursery to tertiary institutions, are all exempted from VAT. Baby products are exempted from VAT. Now, the issue is that most people, let's say, for example, a supermarket where we audit or do their tax filings for them, most times they mix the product. They don't know the one that is not VATable and the one that is not VATable. Most times the incomes are mixed together, especially this one-man business of stuff, you know. The incomes are mixed together, but you are supposed to separate them. If you're operating, for example, we have a client that is operating a pharmaceutical center, operating on baby products, wines, and all basic food items. You know, most times, he just believed that his VAT exempted, but there are some products within the supermarket where that is VATable, while there are some that is not VATable. And most times they even make mistake most times, or even calculating everything. We've seen a situation where all the products and VAT is deducted from them, which is also not expected. So that is why I said this a basic enlightenment on what you should do and what you should not do. But my basic point this evening to you is that if you're operating a business within Nigeria and you for example, you are a contractor, you do jobs with government, my dear brother, my dear sister, what you need to do is, once that job is given to you and payment has been made, please file your VAT. State exactly what the amount is, the VAT that is deducted, and file. Where people fall prey mostly is the aspect of non-filing, non-VAT remittance. Not that the VAT was not paid, because government jobs, they deduct it at source. But most people don't know that even after deduction, they are expected to remit such VAT to Federal Inland Revenue by filing their monthly VAT. Thank you, and stay tuned. They will come again.